Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 30th of October, Friday. So as usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold falling by 0.49%. The euro also extended its losses against the dollar as much as 0.62%. The dollar index extended gains by 0.53%, while oil plunging by 3.37%. So let's get into further details with the headlines of today. First off, let's talk about the gold, where we can see that the precious gold extended losses for 3 days in a row as talks on the stimulus turned sour. Now, during the financial distress amid the pandemic, Americans are in desperate need of a stimulus support. However, hopes for the stimulus fell after economic advisor Larry Kudlow said that the administration does not depend on the stimulus to aid its economic recovery. Now, the safe haven gold, which is typically used as a hedging tool for inflation, such as moments like this, fell as the stimulus was put to halt while the dollar rebounded. We will cover more on the gold in the technical analysis later on. First instruments involved here would be gold itself. Now moving on, let's talk about the euro, where the euro fell to a 1-month low against the dollar on Thursday after the European Central Bank left a dovish tone during its policy meeting. Now, according to President Lagarde, risks to the European Union's recovery are tilted towards the downside due to the recent resurgence in the COVID-19 infections across Europe. Furthermore, Lagarde also signaled that the bank is ready to loosen its monetary policy further during December's policy meeting. Now, the European Central Bank's current suggestion is to increase their bond buying program and also to possibly lower its deposit rate or the interest rate by 10 basis points. Now, this is a dovish tone due to the signal of a rate cut during the next meeting, thus causing yesterday's plunge in the euro. So instruments involved here would be euro, and also supporting the dollar, as the correlation between the euro and the dollar is significantly high. So that's all for the fundamentals. Moving on, let's take a look at the news release. So please take note, times stated here are at GMT plus 8. So the first data would be at 5 PM from the Eurozone, where Germany will be releasing its gross domestic product data, where it is forecasted at 7.3% compared to the previous quarter of economic downfall of 9.7%. So the third quarter GDP is expected to provide a positive result, as the third quarter is where we can see that the coronavirus number of infections are declining. However, what investors are focusing on would be the fourth quarter, as the recent resurgence of the COVID-19 infections would definitely jeopardize the overall global economic growth. And at 6 PM, Euro will be releasing its consumer price index as well, forecasted to remain same as previous month of negative 0.3%. Any reading below the forecasted value would exert negative pressure onto the euro. And lastly, at 8:30, Canada will be releasing its monthly gross domestic product, where it is expected to fall lower from previous month of 3% to now 0.9%. Any reading lower than the forecasted value would exert negative pressure onto the Canadian dollar. So that's all for the news release. Moving on, let's take a look at the technical. So an overview of instruments to be covered. First off, GBP USD H4 chart showing an uptrend. Euro CAD H4 chart showing an uptrend as well. For the Australian dollar against the New Zealand dollar, in its H4 chart still in a strong downtrend, whereas for gold in the daily chart starting to show a downtrend. So let's take a look at the chart analysis, starting with the pound. So in this H4 chart, pulling back, we can construct the Fibonacci from previous high towards the low. And yesterday we have covered on an overall upward channel for the pair, where we can see yesterday has showed a confirmation of a breakout below the upward channel. Now as the pair rebounded off the 23.6 back towards the bottom level of its previous upward channel, we would suggest investors, aggressive investors, to consider short positions at the current level 1.2940, or to wait further until towards the 200 moving average and also the bottom level close to 1.2970 before entering into short positions for the pair. Stop loss should be placed above the 38.2 Fibonacci, while a take profit can be targeted all the way towards the 23.6 Fibonacci at 1.2870. Whereas for cautious investors, you are advised to wait for a breakout confirmation from either side of the 38.2 Fibonacci or the 23.6 Fibonacci before entering into positions for the GBP US dollar. Next, for the Euro CAD, constructing the Fibonacci from the high towards the low, extending towards the back, we can see levels as this. And yesterday we have also covered an overall upward channel for the pair, where we can see that the pair has actually faced rejection from the resistance zone near 1.5660, and the pair is now currently testing back towards the bottom level of its upward channel. MACD signaling a bearish momentum suggests the pair to extend lower after successfully breaking below its upward channel and also the 38.2 Fibonacci near 1.5520. After the breakout, cautious investors are advised to consider short positions. Stop loss should be placed back into the upward channel, mostly close towards the 50.0 Fibonacci near 1.5560, and the take profit targeted all the way towards the 23.6 Fibonacci at 1.5470. Whereas for aggressive investors, if the pair fails to break below the 38.2 Fibonacci, remember it is still trading in an overall upward channel, and aggressive investors can consider long positions. Stop loss should be placed below the 38.2 Fibonacci near 1.5520, and a take profit targeted all the way towards the 61.8 Fibonacci at 1.5600. Next, for the Australian dollar against the New Zealand dollar, in its H4 chart, we can see that overall the trading for the pair has been very bearish for the past few days, and in terms of MACD, it is signaling a very strong positive divergence signal where momentum is constantly building higher, whereas for the price action, it is continues to move lower. And in terms of the RSI, we can also see that the oscillator from the RSI is showing a rebound from the oversold region, also signaling a positive divergence signal, where we can see overall it's moving up where price action is moving down. Thus, we will expect a strong technical correction from the pair, and towards the point of its technical correction, we will need to construct the Fibonacci from the previous high all the way towards the low over here at 1.0595, and we can expect a strong technical pullback all the way towards the 23.6 Fibonacci at 1.0675. Now, aggressive investors are advised to consider long positions at the current level 1.0620. Stop loss should be placed below the lowest point at 1.0590, and the take profit can be targeted all the way towards the 23.6 at 1.0670. Whereas for cautious investors, you are advised to follow the trend, wait for the breakout below the 0.0 Fibonacci before entering into short positions for the pair. Lastly, for gold in its daily chart, now constructing the Fibonacci from the previous low towards the highest point, we can see that overall trading for the gold in its daily chart is currently forming a possible downward channel, and we can see that there are plenty of rooms for gold to fall further. First target would be at the 38.2 Fibonacci at 1840, and the second target would be the bottom level of its downward channel close to the 200 moving average at 1800. Thus, investors can consider short positions on gold, but however should wait for a technical pullback a little bit. So the entry point should be around 1880. Stop loss should be placed 10 pips from the level at 1890, and a take profit targeted 20 pips at 1860, or a further target would be at the 38.2 Fibonacci near 1840. However, that would require some time, and a highlight on gold would be the next week 3 major events that would have large impact onto the gold market as well. First would be the US presidential election, followed by the Fed's policy meeting, and also lastly the non-farm payrolls. So we can expect large fluctuations in the market next week, especially towards the dollar market and also the gold market. So entering into the gold market, investors should always remember about proper risk management, and remember to set a stop loss and a take profit to avoid strong losses. So that's all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next week on our market briefing, and happy trading to all.